Good morning, viewers. It's Tuesday morning, May 6, 2025, and I'm your host, Sunil Thakker, our Sunny Talks Money. Welcome to ST Money's 7 a.m. early morning news, where we provide you the latest, concise, and precise stock market wrap with accurate figures and numbers. A historic stock market run came to a halt as President Donald Trump's latest tariff remarks provided little relief to investors bracing for the impacts of his trade war on the economy and corporate earnings. The big stock rebound showed signs of exhaustion on Monday. Despite data showing a pickup in growth at US service providers, all three major indexes declined. While Trump suggested some trade deals could come as soon as this week, there was no indication of an imminent accord with China. The S&P 500 fell 0.6%, while the Dow Jones Industrial Average slipped 0.2%, or roughly 99 points, despite some better than expected economic data and fresh promises of trade deals from Treasury Secretary Scott Bessent. The S&P 500 halted its largest rally in about 20 years since 2004, and the Dow also snapped a 9-session winning streak, its longest since December 2023. Both indexes snapped 9-day winning streaks, while the tech-heavy Nasdaq Composite dropped 0.7%. Had the S&P risen for a 10th straight session, it would have been the benchmark's longest streak since 1995. Heading into Monday, stocks had been on a remarkable run, buoyed by solid economic data and steps taken by Trump administration to soften some of its trade policies. While the S&P 500 is still down 3.9% for the year, it has effectively erased losses that followed President Trump's unveiling of tariffs on April 2, the Liberation Day. Investors got more good news on Monday when the Institute for Supply Management reported stronger than expected U.S. services activity. The Purchasing Managers Index rose to 51.6 in April, up from 50.8 in March and above the 50.4 reading anticipated by economists. Prices paid by businesses for materials and services raised to the highest level in more than 2 years, indicating tariffs were causing inflation pressures to build. Respondents continue to mention federal agency budget cuts as a drag on business, but overall, results are improving. Also supporting stocks were comments from Bessent. On Monday, Treasury Secretary Scott Bessent said Trump's tariff, tax cut, and deregulation agenda would work together to drive long term investment to the US, adding markets could overcome any short term turbulence. He mentioned in a TV interview that 17 countries had approached the Trump administration with good trade proposals to avoid higher US tariffs on their exports. Despite many US imports from China currently facing a 145% tariff, threatening trade between the two countries, Besson said that we could see a substantial progress in the coming weeks between the US and China. One drag on the shares: Trump's comments over the weekend calling for 100% tariffs on movies made overseas. That weighed on the entertainment company stocks. Several movie and television production stocks fell sharply right after Trump's announcement, but subsequently paired losses. Netflix fell 1.9% to snap an 11-session winning streak, while Amazon.com lost 1.9% and Paramount Global was 1.6% lower. Tyson Foods tumbled 7.7% after the meat packer missed quarterly revenue expectations. Its shares slumped as investors shrugged off stronger than expected quarterly earnings to focus on deepening losses at the company's beef business. However, Skechers surged 24.3% after the footwear maker agreed to be taken private by 3G Capital in a $9.4 billion deal. This marked a splashy return to the deal making for the investment firm after nearly 4 years. Meanwhile, Class B shares of Berkshire Hathaway stumbled 5.1% after Warren Buffett said he will step down as CEO of the conglomerate at year end. In late hours, Ford Motor Company pulled its financial guidance and said auto tariffs will take a toll on profit. Palantir Technologies Incorporated sales forecast fell short of Wall Street's high hopes. Elsewhere in the market, oil prices declined after OPEC cartel and its allies agreed to a further boost to output. US crude fell 2%, to $57.13 a barrel, its lowest settlement value since February 2021. Energy down 2% was the worst performer of the 11 major S&P sectors after OPEC decided to speed up its output hikes, causing concerns about more supplies as demand remains uncertain. Treasury yields were lifted by the ISM service data. The yield on the 10-year note settled at 4.342%, according to TradeWeb, up from 4.317% on Friday. The dollar index retreated. In Taipei, the Taiwanese central bank convened an emergency meeting and denied the U.S. had demanded Taiwan boost the value of its currency. Gold futures climbed about $3,300 a troy ounce. They had hit an all-time high last month. Investors will now closely eye the Fed policy announcement on Wednesday, in which the central bank is largely expected to keep interest rates unchanged. Commentary from Fed Chair Jerome Powell will be scrutinized for signs of when the Fed will adjust monetary policy. My take: Wednesday's Federal Reserve decision and the stock market rally. Attention will soon shift to Wednesday's Federal Reserve decision after bond traders dialed back rate cut bets that had steadily mounted as Trump's trade war unleashed havoc in financial markets. As long as the economy holds firm, Jerome Powell and his colleagues can more easily justify the standing pat. Uncertainty rules amid a trade war and the ever changing landscape of tariffs. But with the hard data on consumer spending and employment still hanging in there, the Fed will remain firmly planted on the sidelines. Recent economic data seems to have assuaged market concerns of a recession, but the outcome of Trump's tariff war has yet to be felt. For several market observers, tariffs will eventually slow the US economy as supply chains are upended and consumer confidence tumbles, with the increases in levies possibly delivering at least a temporary inflation shock. Clearly, it really is the uncertainty and the volatility, and that is how corporates, investors, the world per se are feeling globally and domestically. And as part of that, everyone is trying to figure out, is there opportunity in this market? And that's why there are all these market swings, and each day there's a new report that may pivot things in the economy. We could be running out of daylight. The longer policy uncertainty persists, the greater the potential hit to economic activity. Tariff clock is ticking, and the Trump administration has a fairly limited window to make progress on trade deals before the economic damage becomes more pervasive and less reversible. The longer trade policy uncertainty lingers, the more economic damage accumulates. Maybe this is too much, the uncertainty, the volatility, and so maybe take some chips off the table. But in actuality, this in recent times tends to beget more in the way of a rally. Whatever be the Fed's decision today, and while there are many reasons to doubt the recent rebound in US stocks, it has at least one powerful factor on its side: momentum. And that's a wrap for today, my dear viewers. And if you got value from this, please do subscribe, like, and share this video as much as possible. Please mention your email in the comment section so that we can forward you the daily market wrap in your inbox at exactly 7 a.m. ET each weekday. I will see you again tomorrow morning. In the meantime, happy investing, stay inspired, and remember, it is all about money.